Now, how can you use factor investing to your advantage? In this video, we will give you detailed examples of how it works. Factor investing is an investment strategy that involves selecting stocks based on specific characteristics or factors that are believed to be associated with higher returns. These factors can include measures such as size, value, momentum, quality, volatility, and others. The idea behind factor investing is that these factors are persistent over time and are not easily explained by broader market trends or economic cycles. By focusing on specific factors, investors aim to capture the excess returns associated with these characteristics. Without further ado, here are the examples. Value investing. Value investing involves selecting stocks that are undervalued relative to their intrinsic value. One common metric used to evaluate value is the price-to-earnings (PE) ratio. For example, suppose an investor screens for stocks with a PE ratio below the market average of 20. They might find a stock with a PE ratio of 15 and a price of $50 per share. If the company's earnings per share (EPS) were $3, the stock's PE ratio would be 16.7, $50 divided by $3. This stock would be considered undervalued compared to the market average and could be a potential value investment. Momentum investing. Momentum investing involves selecting stocks that have shown recent positive price trends. One common metric used to evaluate momentum is the 12-month price return. For example, suppose an investor screens for stocks with a 12-month price return above the market average of 10%. They might find a stock with a 12-month price return of 15% and a price of $100 per share. If the investor buys this stock and its price continues to rise, they could potentially realize a profit. Quality investing. Quality investing involves selecting stocks of companies that have strong financials and a history of stable earnings growth. One common metric used to evaluate quality is the return on equity, ROE. For example, suppose an investor screens for stocks with an ROE above the market average of 15%. They might find a stock with an ROE of 20% and a price of $75 per share. If the company has a strong balance sheet and a history of stable earnings growth, it could be considered a high-quality investment. Factor investing can be implemented through various methods, including smart beta strategies, exchange-traded funds, ETFs, and actively managed funds. It has become increasingly popular in recent years, as investors have become more aware of the potential benefits of focusing on specific factors when making investment decisions. Factor investing can be a powerful tool for investors looking to enhance their returns and diversify their portfolio. Live rich and prosper. See you on the next video.